Bhumika ma'am?
Meeting ஆரம்பிக்குது.
Yes, Bhumika ma'am?
Yes, ma'am.
Yeah.
Shall I start?
Yeah, please.
Hello, friends. I, on behalf of Women Members Empowerment Committee of ICAI, welcome you all in the Sky High Symposium Series 36. Sky High Symposium is a Wednesday series of programs conducted by the Committee for the Women and by the Women. It's one of the Women Members Empowerment Committee's initiatives to only disseminate information to women members on technical updation and non-technical skills, but also to empower and inspire women members to come at forefront and realize their verbal skills at public forum. Today, we are going to cover session on legal compliances for startup and opportunities for chartered accountants in valuation. For our first session, we have Ms. Shweta Singh with us. Let's welcome her. Shweta Singh is a chartered accountant. Let me brief introduce Ms. Shweta Singh. Shweta Singh is a chartered accountant and registered valuer with Insolvency and Bankruptcy Board of India and a commerce graduate from Sri Ram College of Commerce, University of Delhi. Shweta is a course research associate of the IICA Valuation Certificate Program under the aegis of the Ministry of Corporate Affairs. She is an associate course director of the International Business Valuers Association, a registered valuers organization registered with the Insolvency and Bankruptcy Board of India. She has over 8 years of extensive experience of valuation of companies in India and abroad in the industry of construction, auto component, transportation and logistics, chemicals and fertilizers, sugar, retail, hotel and tourism, QSR, education and pharma. She has performed valuation engagements for accounting purposes, including intangibles, purchase price allocation and impairment testing, FAMA, mergers and acquisition, ESOPs, cross holding, dissenting shareholder actions, economic damages, family settlement, income tax and other business valuation purposes. Along with taking up various valuation engagements, she frequently participates in arbitration proceedings leading to valuation. She has been involved in valuation-related arbitration at the London Court of International Arbitration. She has been working for startups in association with IIT Roorkee. She's also attending seminars and trainings. She has been a frequent trainer in the valuation area and has trained students from IIT Delhi and the team of the United Nations Food and Agriculture Organization in 2017. Spoken on impact of COVID-19 on valuations, practical approaches and useful tips organized by IICA, training on business valuations organized by the Association of Chartered Accountants of Nepal, spoken at Women CA Conference on Valuation organized by Bangalore branch of SIRC of the ICAI, visiting faculty at the International Business Valuers Association, webinar on valuation organized by GIPA Professional Association. Let's welcome Ms. Shweta Singh to join our starter session. Shweta ma'am.
Thank you, Bhumika ma'am, for such a nice introduction.
Thank you.
And namaste and good evening, everyone. Thank you, everyone, for joining. And it's a great pleasure interacting with all of you. And my greetings to all the panelists. My co-technical speaker, Garjana madam, has not joined yet. And Shanu ma'am, Hital ma'am, and Bhumika ma'am, and Charmi, and everyone. So today we will be discussing an overview of valuation and the opportunity for this for us in this area, and we can discuss few of the technicalities in valuation. What are the different approaches? What are the different methods? And so let's first understand the institutional framework of valuation in India. And anyone can put my PPT on the screen. Thank you, Bhumika madam. Just skip the front page. We can come to the next page about the institutional framework of valuation in India. Thank you. So, before 2017, there was no institutional framework of valuation in India that imparted the legitimacy to the valuation profession and while holding the valuation professionals accountable for their services. And the company's registered valuers and valuation rules 2017 made under the Companies Act 2013 was the first centralized institutional framework for development and regulation of valuation profession. Though it was restricted to valuation required under the IVC and Companies Act 2013, then the amendments came in Schedule 3, and where the entities has to disclose if the valuations are carried out by the registered valuer. And the valuation rules also provide for the valuation standards and the code of conduct for valuers. Some professionals in the past and even now in 2020 issued valuation reports without following any valuation standards. So what we have not, so, and if they say that what we have not followed any valuation standard, it's like that one has prepared a financial statements without following any accounting standards. So you can see how credible the valuation reports were. So, and ICAI brought the valuation standards in India for the first time, not in 2018, it was 2010, by the name Corporate Affairs Standard 1, CAS 1, when there was no statutory recognition of valuation profession. And but it was that time also, it was not mandatory but recommendatory. But who stopped us to follow any valuation standard? I just give you an example. I remember where I was involved in a real estate valuation arbitration, where I was supporting the counsel to cross-examine the valuer of the other party. And the valuation date, it was current, it is a current case just 2 years ago. And the valuation dates were in 2011 and 2012. And the valuer did not follow any valuation standards. So the council asked that the valuer, why you didn't follow any valuation standards? So the answer was that there was no valuation standards in India, and the ICI has issued the valuation standards for the first time in 2018, which wasn't true. So although the standards were not mandatory, but it adds the credibility to the valuation reports and all the valuation processes. So, and because of not following the standards, I can tell you that there was an overall error of 500 crores, which was unbelievable. And on the website of ICI, these standards were removed later on, but you can retrieve the old standards using any forensic tools, or I can share with the committee after the session. And because the old cases are now opened and it can come to you for review. So as a chartered accountant, as a valuer, we all should know about the history of valuation, and especially when the ICI has issued the standards 12 to 13 years back. So now the current rules, valuation rules, they provide a two-tier regulatory architecture, where the IBBI has been designated as the principal regulator, while multiple competing RVOs act as frontline regulators. Currently, there are 16 RVOs in India, and now there will be 15 on the website. If you see, it says that 16 RVOs, but actually it is 15. One of the RVO is merged, and an individual having specified qualification and experience need to enroll with an RVO, complete the educational course conducted by the RVO, and pass the examination conducted by IBBI, and subsequently seek registration with IBBI as a valuer. And currently there are about 5,200 plus individual registered valuers. If you see the data, women valuer are even less than 10%, although the overall number the CA women or other professional bodies women member is less as compared to overall, but still this number, this data of women is still less. So here as a women member, we have a lot of opportunity to practice in this area. And if there is a concept of individual registered valuer and the entity as in registered valuer entity. And as there are total 79 RVs. All these details are there on the website. You can check. And this can you come to the next slide? Okay, just go above, ma'am. Okay, so now what is happening in this framework is that going forward, the Valuers Bill 2020 is likely to completely transform the valuation profession in India, and it is expected that this structural change would not only bring in qualitative and quantitative changes in the valuation, but would also bring in valuation discipline in the coming years. The current framework, as we know, that it is restricted to IBC and Companies Act, and that can be extended to other acts. The framework envisaged in the Valuers Bill 2020 is there is an institute specific for the valuers in US and in Singapore. Although the Singapore Valuation Institute is not backed by the parliament in that country, but our valuation course is backed by the parliament. And after the passing of this bill, it was supposed to pass in 2021, but because of COVID, it got delayed, and it can come anytime. So there will be a separate institute instead of all the 16 RVOs. That would be called a National Institute of Valuers, which would be a statutory body primarily responsible for development and the regulation of the valuation profession in India, and the registration and regulation and everything. And all the valuation institute, the current like RVOs are there. So all the RVOs will be merged with the institute. This would act as the training center of the National Institute of Valuers. And the National Institute of Valuers, which it is likely to be the IICA, the think tank of MCA. And अब जो valuer already है, उनका क्या? The registered valuer who have already qualified for this exam and registered, they will be migrated to the new the valuers under the new institute from the date of जिस डेट से उनका registration हुआ था. And after passing the bill, those who want to become registered valuer, just like our CA course has an extensive training of 3.5 years, the valuer aspirants, they will have to undergo a 4-year training course under a practicing valuer to become a registered valuer. So I think this could be the right time or the final call that if we want to pursue our career or extend our practice in this area, we should go for this registered valuer program. And see why this area is crucial for us as a chartered accountant, whether women or men. So the most important skill in the business valuation, I'm not saying that land or plant and machinery, but the business valuation is to understand and interpret the financial statement numbers and the narratives, And I believe that no one can read financials better than a chartered accountant. There is a lot of opportunity for chartered accountants to extend their practice in this area, and CAs already have that foundation, the base for that. So, but CAs should have the skills of valuation of land and building and plant and machinery also. Although now there is SFA category for CAs, but IVS, the International Valuation Standards, says that if you are using the report of another valuer, you could be held responsible for that valuation as well. So if you are using the valuation report of any other valuer, for example, in case of business acquisition PPA that I was performing, so the land or building or plant and machinery, there was a huge plant of 900 crore, and as a chartered accountant, I don't know what kind of plant and machinery is there in the plant. So I have to accept the report of the plant and machinery valuer. But rather than going blindly, okay, this is the valuation, I am a SFA valuer, I can use I can perform some of the sanity test so that I can have a sense that yes, this valuation can not 100% accurate, but it's reasonable, it's in the range, so I can accept. And so also the valuation skills is needed for board position. Of course, that includes the women director as well. It is not mandatory but preferred because people with such skills will bring a lot of advantages as they contribute in investment decisions, asset disposable decisions, and valuation review exercise in board is another reason. In IBC, we have seen so many valuation reports were put on the board of the bank, and we all know that how the IBC was misused. Well, it is another matter, so we are not discussing that right now. And valuation skills also help in audit committee of the board. Example, a person with valuation expertise in ACB can help in framing valuation policies, ensuring selection of right kind of valuer, and thereby improving the corporate governance and decision having large financial implications. And valuation partners or a valuation expert as a part of the audit team is now becoming a common practice because of frequent requirement of valuation under Ind AS. We can take the example of Big Fours. All the audit department of the Big Four, if any of the valuation issue comes with them, they refer it to their in-house valuation team. So as an auditor also, we should have the skills of valuation. We should understand the valuation. Because in the coming years, if we do not have the valuation skills, we will not be able to audit. So, and this action and conduct of these would determine the future of the profession, right? Who does not need valuation today? Whether you are working for value creation, value capturing, lending, accounting, value distribution, or tax collection, all are affected by valuation, be it courts or quasi-judicial authorities, governments, banks, financial institutions, regulators, auditors, lawyers, investors, stakeholders. Valuation is at the heart of today's market-based financial system, and the increasing use of valuation has meant that the subject valuation has moved up the agenda of all the stakeholders. So the key areas where banks generally requires valuation services are like the collateral valuation for loan appraisals, collateral valuation of loan provisioning, valuation of loan portfolio transaction, and valuation of bank own assets for accounting purpose, valuation under IBC, inventories, surface I, valuation for merger transactions like acquisition, exit, etc. Then valuation of investment rights and other intangibles, valuation for raising funds. And most of the banks in India are using services of RVs, and some of them like SBI, Union Bank of India, they give preference to RVs as they are covered under two-layer regulation. Clearly, RVs and RVEs are having the edge not only from the regulation point of view, but also from development of profession point of view. Further, as of now, each bank is doing the separate empanelment of valuers, but considering the interconnected banking like consortium, etc., the empanelment needs standardization as one bank may be affected by other bank practices and policies related to valuation. Banks would be better served if uniformly in selection of valuers is brought in, and this can be done by IBA, Indian Banking Association, similar to forensic auditors or ASM. So further, IBA should ensure that each member bank prefers valuers the registered with IBBI and impaneled with IBA, because such valuers are subject to two-tier regulation and mandatorily they have to undergo the continuous CPRs. So I can tell you where the now the type of valuers employed by the bank is the IBBI RVs or RVEs, registered valuer entities. And in wealth tax, in surface I, the wealth tax valuers are preferred. But once the National Institute of Valuers come into effect and this valuation bill is passed, so everywhere the requirement will be of the IBBI value. So can we come to the next slide? Yes, we are already there. Okay, go up. And we can just I can just read it to you. So in September 2019, IBBI issued a circular. There is a list of provision of the Companies Act and the code under which the valuations are required to be conducted by a registered valuer. Here are all the points like issue for further shares and securities by an unlisted company. Then there is non-cash transactions between a director and the company, compromise or arrangements with creditors, members, purchase of minority shareholdings, submission of report by company liquidator in case of winding up order by NCLT, exclusion from deposits, market value of assets where company accepts deposits which are secured by charge of its assets, then issue of sweat equity shares, return of allotment where security is allotted for consideration other than cash, valuation of shares purchased by its employees or by trustees for the benefits of its employees in a non-listed company. Bhumika ma'am, please come to the next slide. Thank you. So, valuation for financial reporting. So, when the circular was passed in 2019, the Ind-AS valuations were not in the list. And there was a difference of opinion as to requirement of registered valuer for the purpose of Ind-AS valuation. And later on, the amendment in Schedule 3 came, but after the amendment also, it is not written that it is mandatory. But the company has to disclose whether the valuation has been done by the registered valuer or not. And there are certain Ind-AS requirements where there is requirement for valuation, like Ind AS 109, valuation of financial assets, financial liabilities. Here, there is valuation of minority stake, preference shares, CCPS, the corporate guarantees on quarterly basis or half yearly basis or yearly, depends on the methodology of adopting Ind AS. Different financial instruments with call options, put options, or multiple options where the auditors have rotation period, but as of now valuers don't. They do not have. Maybe in the bill the rotation period can also be there. So in case of minority stake, when I was engaged to value some minority stake, I had to undergo some difficulty because the minority shareholders, they do not have the access to the full access to the company. So they were unable to make the projections, and the projections represent projections made by them, or we can only validate, we cannot make the projections. So the projections made by them, they represent the minority cash flows. Therefore, the discount for lack of control is not applied. If you apply the discount for lack of control again, then it would amount to double discount. Then there is a requirement in Ind AS 36, impairment testing. In case of, for example, in case of listed companies, if there is a decline in market prices, which is a market indication of impairment, one of the indication of impairment, the holding company goes for impairment testing of its investments in subject listed company. So they appoint valuer, because as you go by the fair value, the exit price is the fair value and the listed price is the fair value, and through that you can derive fair value less cost of disposal. So another is the value in use, VIU. So sometimes the companies have some non-operating assets which is not truly reflected in the market price, but the valuer has to assess it separately, then test it for the impairment, and this exercise goes on every year. So, and the cash flows for VIU is different from the cash flows of estimating the fair value in Ind AS 113. Like projections in case of VIU does not include any growth capex, though it can include the efficiency improvement capex, but not the growth capex. And the cash flow of VIU is also tested for pre-tax discount rate. Both the discount rates are also different. Then Ind AS 103, purchase price allocation. At the time of acquisition of control by an entity in another entity, the investor has to allocate the total purchase consideration to the individual assets and carry out the reconciliation exercise of WACC, VARA, and IRR, which is a comprehensive exercise. So in that case, not only assets which are reflected in the valuation statements of the company are subject to valuation, but also the intangible assets like the trademarks, the customer contracts, the customer relations, and other IPRs, etc., are required to be valued separately. And the resulting goodwill or the bargain purchase is a write. So if it is a goodwill, it is tested for impairment every year. And again, it's a regular kind of work. So it is very important for auditors also to, as a reviewer, to understand the whole PPA process and the valuation aspects in that. Then there is 102, valuation of share-based payments. The valuation here comes for ESOPs, stock options, etc. Ind AS 38, valuation of intangible assets. valuation of intangible assets like IPRs, trademarks, customer contracts. They can be valued by using multi-period excess earning methods, MPEEM, and the major work in this area, which we are not focusing, is the determination of fair royalty rates. Because if you see the Tata Sons annual report, so Tata Sons have licensed its brands to other group entities and charging a fair royalty fees from them. So although it is the structure is like above 100 crores the royalty rate would be something, below 100 crores of turnover the royalty rate will be something else, although it is not the proper way to determine the fair royalty rates. In determining the royalty rates, the valuer should not only refer to the external database of the same industry from the market, but also test the projections to check the sustainability of the model. Like if I give you an example, the Crystal Lagoon, which is again trying to come to India and proposing to the Indian partners a very high royalty rate of 12%. So while we did all the research and everything, all the projections, investigation, validation, so we got to know that this is a very high royalty rate of 12%, and we gave them some evidences relating to Indian market, how Indian market operates, because they gave the projections to the Indian partner related to Chile, and they do not even know the Indian market. So after that, it came down to from 12% to 6 to 7%, and it was a very comprehensive exercise. And here also a lot of opportunity for the valuers, the chartered accountants as a valuers comes. Another is the Ind AS 41, like agriculture. It prescribes the accounting treatment for biological assets, and यहाँ पे the valuation of plants, like valuation of sandalwood plant, it is very complex, because everything if you have to understand the sandalwood plants, what is the girth, what is the oil content, what at what age it has to cut, and everything. It's a separate thing, the technicalities. So can we come to the next slide? Okay, this one. Okay. So arbitration valuation and other legal dispute valuation, including the valuation review services. Valuation in case of arbitration is required in case of breach of contracts. It could be in the form of lost value or lost profit. If the economic loss is to be determined in the form of lost value, then it requires a concept of valuation. Such valuation are mainly tested in arbitral tribunal. Prominent role of valuer is required in case of determination of fair value in case of dissent shareholder and the shareholders' oppression and mismanagement. Such valuations are mainly tested in NCLT. The expert witnessing is highly skilled but highly paid. Typically, such adjudications involve legal experts, financial quantum experts, and relevant domain experts like construction contracts. If there is some construction related issues, then the expert would be from anyone from the construction industry. And like in a case on which I was working on, had an order of minus 60 crore on the basis of a quantification made by the valuation expert in US, and we were appointed as an expert witness in LCIA from Indian partner side in a joint venture. And on the basis of our report, the cross-examination, the whole case was turned around, and the judgment came to 600 crores from minus 60 crores. So chartered accountants can appear as financial experts in arbitration cases also. And women who are God gifted in terms of super intuitive abilities, where they can be a very good performer in cross examination, women can be a very good arbitrator as well as an expert, the industry expert or the financial expert. So next slide please. Next. We got. Okay. So we have seen the 3 slides, and in 2021, the SIAC, Singapore International Arbitration Center, handled 469 new cases, out of which 187 cases are from India. That is around 40% are from India. And just 18 out of 371 arbitrators are from India. And coming to 2020 data, out of 1,063 cases handled by SIAC, 690 were from India, which is around 70%. And I see a big opportunity here for chartered accountants as a quantum experts. And the likely market size of professional, including the legal experts, quantum experts, arbitrators, only in SIAC is quite big. And if we see the 50% of the GDP of Singapore is from legal and arbitration services. I mean, it's huge, and where the 90% of the cases are originating from India. There is a huge market for valuers in arbitration work as well. और इसमें हमें कोई IBPI का course qualify करने की we do not need it. We just in arbitration work, it is your merit, you sustain on your merit basis. आपकी quality of service is the criteria and not your qualifications. And India's ranking in ease of doing business is improved. It is at 63rd place in 2020. I don't know the later on what is the position as of in 22 or 23, but among it was somewhere in 190 from it was on 77th place earlier. But India did not do well in the contract enforcement indicators. India continues to struggle with this and was ranked at 163rd under this head. And although IICA, which is the think tank of MCA, is taking steps in improving the position of India's ranking, but I just share some of the examples of cross-examination before the honorable justices of the arbitral tribunal. So what is the responsibility of an expert towards the court or arbitral tribunal as an expert? Expert is required to be briefed by the counsel. But the ultimate responsibility of the expert is towards the tribunal. So the expert does the strategic, as an expert should be participate in the strategic discussions with the counsel that could compromise our independence of the expert. So the answer is yes, because the expert witness is independent and should save himself or herself from strategies with the counsel. And what to do when the attorney just say you answer in yes or no, especially where we are asked the ambiguous questions and we are shown multiple authorities, and will it hamper the credibility of an expert if we ask for time to answer such questions? And the answer is yes. You can ask for time, and can answer like I will check my records and then answer. But this should not be so frequent that it seems to the tribunal that expert is underprepared. So next slide, please. You can see here the gender diversity in arbitrators appointment. So the women in the third point, women constitute 64% of the SEAC management and secretariat. 64% is a good percentage. But you look at the second point, or it is the only of the 38 members of SEAC Court of Arbitration, 10, which is around 26%, are of women. So in the managerial and secretarial work, women are there. But as a member of the SEAC Court, the number of women is very less. And we as an expert have a lot of opportunity, because when any these arbitrators are appointed, it is not just that all the arbitrators are from the legal background or should be retired judges, but some of the domain expert also be qualified for the to be appointed as an arbitrators. Like if there is a case and the arbitration in the arbitration, and there is one domain expert arbitration is required to be appointed from the finance field. So here we are also eligible to be appointed as an arbitrator. Madam, next slide, please. Startups. Okay. So need for valuation of startups is much higher than a matured company, and the startup typically are more dependent on equity contribution, as every time for raising fund, valuation for issue of shares is more frequent. They also have to do valuation for providing exit to initial round of valuation. So in a startup valuation for compliance may include Valuation of Companies Act, Income Tax Act, and FEMA. That Garjana ma'am would take the session on the compliance part. And the valuation paradigms represent a central issue for any startup seeking external funding. Transforming ideas and dreams into feasible number is a complex in case of startups. A significant number of startups are intangible intensive, but commercial exploitation would be lacking for multiple reasons. For example, if I can share an example with you, I was working for some technology based startup. Although in India, on the basis of technology or intangible assets, the bank doesn't fund. They do not mortgage the intangible. But internationally, you can have the bank funding for the technology. So there was a technology for the recycling of lithium. Although right now there are reserves for lithium in China or other parts of Chile and Argentina. So what will happen once all these reserves are gone? All these reserves have come in the market in the form of batteries or other gadgets. So after that, those who can recycle those lithium, the metals, they would be the king after 6 to 7 years down the line. So to understand the technology, it took around 1 month for me to understand that technology as a valuer. So it is not just that you have some technology and you are eligible and you can just come up with any number. It is very, very difficult. For me, it was very, very difficult to transform that technology into the numbers, and on the basis of that, some bank in the international market was able to fund that startup. So, and the value is mainly driven in some of the startups. The value is mainly driven by intangible, and hence it is very complex in nature. And the capital structure of startups is also complex in many cases as a result of hybrid financial instruments like CCPS, warrants. Hence, the valuation requires high skill set as compared to similar a company with a capital structure, with a simple capital structure. So, and India being third ecosystem in the world, the need for valuation is not only from the point of view of compliance, but also in the form of advisory services, like which includes estimation of value for internal purpose and valuation insight greatly help in course correction of strategies. For example, valuer can help in understanding operating cost, margins, the working capital, capex, which ultimately affects the valuation of the company. Based on my practical experience, I can tell you in number of cases I have been able to advise my clients on such matters, and then made course correction in matter of strategies, understood key value drivers, key elements and key components of valuation. Other angles related to startup ecosystem is that skilled valuers are needed in venture capital firm, private equity firm, alternative investment firm funds, not only for their own financial reporting valuation, but also for investment decisions. So, madam, please come to next slide, where the recently the consultation paper has been proposed by SEBI, and SEBI has proposed a standard approach for valuation of investment portfolio of AIF, and there are total 900 registered AIFs in India right now. As regards to valuation of investment portfolio of AIF, presently AIF regulation focuses on disclosure to investors and do not prescribe any guideline on the principle, methodology, the standards to be adopted. As such, the managers of AIFs have the flexibility to adopt any valuation principle, methodology, standards by disclosing the same to the investors in private placement memorandums of a scheme of AIF managed by them. And presently, the modalities relating to valuation of investment portfolio of the AIFs are not disclosed in PPMs at the time of submission of SEBI, but also are not reported to SEBI subsequently. So there were a number of issues discussed in this consultation paper, and there was a need to standardize the approach to valuation methodology. And since AIF regulations focus on disclosure to investors regarding the valuation of investment and presently do not prescribe any guideline, so the managers of AIF have the flexibility to adopt any principle, methodology, standard for valuation of investment portfolio of the AIFs managed by them. So this is also a recent a recent proposal where we have an opportunity as a valuer. So that is the reason I'm discussing it. And the meeting of this AIPAC. AIPAC is the Alternative Investment Policy Advisory Committee. The meeting just recently happened in October 22 and November 22. It took into account the recommendations of AIPAC. It is felt that a standard method of valuation can bring convenience to the investors, and hence the standard guideline for valuation may be prescribed. And the IPEV guidelines specify that valuer should use one or more of the following valuation techniques as of each measurement date, taking into account the market participant assumptions. यहाँ पे भी market participant assumption आ गया now in AIF valuation, AIF portfolio investment valuation, as to how value would be determined. So there are they have discussed in the proposal the market approach, the multiple of earning, and the revenue multiple, the industry valuation benchmarks, market price available for instrument quoted in on an active market, then income approach, DCF method, replacement cost approach, and NAV techniques, everything. And the issue was about the criteria of the independent valuer. While category 1 and category 2 of AIF are required to undertake valuation of their investments by an independent valuer, but no criteria have been prescribed in AIF regulation for the independent valuer. The requirement of independent valuer has been mandated considering that category 1 and 2 AIF invest primarily in unlisted securities where the market price is not available. So it is felt that the specifying objective criteria for an independent valuer is important, especially for valuing the investment portfolio of unlisted securities, which requires specific skill set. So, and presently it is not mandated for category 3 AIFs to appoint independent valuer for valuation of their investment portfolio. However, considering that as per the extant regulatory framework, category 3 AIFs may also invest in unlisted security. So it is felt appropriate that for the purpose of calculation of NAV, the valuation of such unlisted security may be undertaken by the independent valuer. So here the proposal is that the manager of AIF shall be required to ensure that AIF appoints such independent valuer who satisfy all the following condition. Read number 1, which is very important, is a valuer registered with the IBPI and has membership of a professional institute established by an act, which includes our institute of ICAI, Institute of Company Secretary, Cost Accountant, then the CFA charter from the CFA Institute, has at least 3 years of experience. That is obvious because if once you are a registered valuer, you obviously had the 3 years experience. It is the criteria of to be eligibility criteria for the to become a registered valuer. So, and next slide, madam. Then there are others, the Income Tax Act, and there is Section 9, income deemed to accrue or arise in India, Section 50, Section 56, 92, UA. यहाँ पे अभी registered valuer की कोई requirement नहीं है फिलहाल. So in Section 5 में an asset or a capital asset being any share or interest in a company or entity registered or incorporated outside India shall be deemed to be and shall always be deemed to have been situated in India if the share or interest of foreign entity derives directly or indirectly its value substantially from the assets located in India. So उसके दो क्राइटेरिया है. पहला कि 10 करोड़ से ऊपर होना चाहिए. सेकंड I'm talking about the substantial interest. 10 crore से ऊपर होना. Second is the 50% of the value should be owned in India. So यहाँ पे the entity which is in India also has to be valued, and the other entity which is the foreign entity also has to be valued. Then only we can know whether it exceeds 50% or not. So here also we can take the engagements. And there is then Section 92 of the Income Tax Act, which is the arm's length price. वहाँ पे आपको 5 methods हैं हमारे पास, but जो valuation है that is other than the that is not covered in the first 5 method, but in the other method. Then the surface eye, we have already discussed that is required in banks. Well tax valuers is the criteria right now, but after passing of bill, it can be registered valuer. Then the Limited Liability Partnership Act 2008, and FEMA, and the black money, and SEBI, one of the requirement was the AIF, we have already discussed, and then of course the IBC, and that's what's all from my side, and we can discuss, interact with the participant and take up the questions.
Yes, ma'am. Yavrit, I would like to ask all the participants if they are having any questions, they can write it to us so that we can present it to Shweta ma'am for further clarifications or guidance. Any of the members have any questions, then they can write it to us in the chat box given below.
Little ma'am, one question we have received now from Niti ma'am.
Yeah, she is asking about one of the questions she has asked that if the CA has spent the 4 years to become the valuer, then why do we CFA, which is going to help open gates globally for the CAs?
Okay, the comparison is with the CFA course. The ma'am, you are talking about the CFA USA or is the CFA which is in India? Because the CFA course does not give you the license to practice as a valuer, but though it has the brand value, it has the credibility. So internationally, everyone would prefer to engage CFA, and they prefer CFA over the IBBI valuers, because as in IBBI valuers, we have the we get the statutory recognition and we get the license to practice. So that is the importance of the course of IBBI in India.
Okay, ma'am. Another question is that the course is it of 3 years, or what about the exams for the same?
Okay, so first you need to register under some RVO. Like there are 15, 16 RVOs, and our institute, ICAI, is one of the RVO. You can register yourself there, and they will conduct 50 hours training. After you undergo the 50 hours training, you apply for the examination, and examination, it is all controlled by IBBI. There are centers, you can opt for any center and give exam anytime. The time is not the problem for that. And once you qualify, you just have to apply with your RVO, inform your RVO, and apply with the IBBI for the registration. So time is not the criteria. You can do it in 6 months or 4 months or 1 year. It's all up to you. But after the bill is passed, so there could be time can be a very important factor, because I don't know what they are planning. I think they are making the course very comprehensive, and we will have to undergo for a training of 3 years or 3 to 4 years, just like we pursue the course of chartered accountancy.
Okay, ma'am. That's all. We received the questions for this session. So now
Okay.
I would like to say thank you, ma'am, for elaborating us with the various opportunities for the CAs in this evaluations field, and by enlightening us with the various compliances which are mandated under the various judicials by various laws, where the chartered accountant being a valuer can play a very important role. And you have also described us with the how we can take up this opportunity by providing us with all the requirements under the various law. And also, as we all know, the institute also run with the program for the post qualifications, that is for the valuation. So once again, I would like to thank you, Shweta ma'am, for this very value additive and very informative sessions. Thank you so much, ma'am.
Thank you, Hetal ma'am, Shanu ma'am, and Bhuvana ma'am, Bhumika ma'am, and other members of the committee, Ruchi ma'am. So if you permit me, I just have an arbitration going on and I would like to leave. So can I
Yes,
leave?
ma'am. Yes, ma'am. Yes. Thank you
Okay.
so much. Yeah, thank you so much.
Thank you so much. Thank you.
Thank you, ma'am. Thank you. Now, moving with the next sessions, I would like to take a charge, Uma ma'am, to introduce the faculty. Next faculty.
Good evening, all, and thank you for this opportunity to get introduced to Mr. Garzana Rathore. Garzana Rathore. The ma'am has qualified as chartered accountant in the year November 1997 and has completed her ISA in December 2003 and has started adding colored feathers. She is the first female chartered accountant from Ratlam and has become the chairperson of Indore branch of CARC of ICAI in the year 2016 and 17. She has also learned Kathak for 7 years and passed exams up to 5th level. She has also authored a book in the name of Guide to Incorporation of Company under New Companies Act 2013. And not only that, she is also writing articles for the CA newsletter and newspapers. She is also writing blogs on parenting. Not only that, she is also doing various social welfare activities like educating of kids, female education, female health, and environment awareness. She is an active participant of NGO working for the education, female health, and leprosy. She is also a visiting faculty in various colleges for finance and taxation. She is teaching. She also teaching for privileged children. Thank you, ma'am. Thank you for this wonderful opportunity. Now I'm handing over the proceedings to the committee. Thank you.
Garjna ma'am, please start. Yeah, ma'am.
Good evening, everyone. Now we all are watching Shark Tank India. Last week only we watched Shark Tank India, जिसमें Gearhead Motors के 2 entrepreneurs were there, and there was problem for them in getting the funding. And the reason being that they had created 2 startups for them, and because of which both 2 of the sharks, namely Aman Gupta and Piyush Bansal, were not ready to give them funding. The reason was that there were 2 companies और वो समझ नहीं पा रहे थे कि इन 2 कंपनी के इंफ्रास्ट्रक्चर के साथ जब ऑलरेडी एक इन्वेस्टर उनके पास है तो कैसे इन्वेस्ट कर पाएंगे. तो जब हम ये सारे सिनेरियो देखे तो हमें लगता है कि यार एज अ चार्टर्ड अकाउंटेंट हमारा रोल इन टर्म्स ऑफ स्टार्टअप बहुत ज्यादा बढ़ जाता है. तो उसी को आज थोड़ा कुछ कि हम एज अ लीगल कंप्लायंस हम कैसे स्टार्टअप में एक अच्छा रोल प्ले कर सकते हैं, वो आज आई एम गोइंग टू टॉक अबाउट दैट. Just is my screen visible? I'm just sharing my screen. Yeah. Okay. So, what it takes to create a valuable startup? Yeah, just a minute. Legal compliances for a startup. What it takes to form a startup? It takes the people who are like-minded. It takes the trust, the skill set, their personal qualities, and the honesty, plus the persistence. The biggest thing required for a startup is the persistence. How long they are ready to hold with the losses or with not getting the tractions. Now, moving directly to my topic, legal compliances for a startup. Let us understand first what is a startup. As per DPIIT, if the company or the organization fit into this criteria, it can be termed as a startup. What are the criteria? The criteria are it should be an incorporated body. It can be a private limited company. It can be a registered partnership firm or an LLP. If it is incorporated, it is eligible to be registered as a startup. The turnover of the company should not be more than 100 CR in any preceding 10 years. Actually, the company which is incorporated in last 10 years is only eligible to be registered as a startup. The area for which the company is working should be innovation, some problem to which the company is providing the solution. Say, for example, if we talk of Oyo, so there was a problem of not getting the vehicles. So looking at that, the founder has created Oyo. So similarly, any topic or any problem for which the innovative solution is found out, then only the startup can be created. There is this startup, if you have heard of ecosystems, जिसमें small cold storage have been created. So there was the problem with the villagers that they were finding it difficult to store their products, and taking the product to the big cold storages was really difficult. So for small villages, this ecosystem has created the cold storage. Then, along with that, it is necessary to get the startup registered and obtain the certificate of registration. In India, who gave the certificate of registration? The certificate of registration for startup is given by DPIIT, that is under the aegis of Ministry of Finance. For getting the DPIIT registration, you need to log on to startupindia.gov.in. You need to create your ID. Login ID will be your email ID and password will be of your choice. Then after creating that ID, you need to give the write-ups. There are 5-6 questions which have been asked on the screen, and for words ranging between 200 to 1000 words, you are required to give the reply of the same. It is mainly the nature of business, then what innovation the startup is providing, how it is providing, what is the stage of a startup, whether the product has been developed or it is in prototype stage or the startup has already been working. What is the scalability? The main idea behind a startup is to have employment generation and to have scalability. Startup gives employment generation more than the normal industry, as well as they are scalable at a much faster rate than the normal industries. Then you have to fill in the form online and submit the application. Within, say, in a week's time, you can hear from DPIIT, whether if there is some query, they'll ask you for the solution of those queries. Else, they'll give you the registration as a startup. After getting the registration, for us as a chartered accountant, the work starts. Of course, for getting a registration also, it is, as a chartered accountant, not as a chartered accountant, but as a startup founder also, I felt that it is necessary to have a proper guidance from a chartered accountant before filling the details on DPIIT for DPIIT registration. So what are the other registrations which are required for the startup? Once you are registered with DPIIT and has received, yeah. Yeah, I'm just taking it to the next one. Wait. So actually, once you are registered with DPIIT, then you are eligible for the exemptions under Income Tax Act also. The other registrations which are required, or the other licenses which are required for startup, are routine license. If you have registered a company, you already will be having a PAN number and TIN number, which we are getting nowadays along with the certificate of incorporation. If it is not a company and it is a registered partnership firm, you need to apply for PAN number, TIN number. You need to take GST registration. See, it is not compulsory to have GST registration immediately. Once your turnover reaches a certain level, or if you want to claim the ITC, then only you should apply for GST registration. Then along with GST registration, you need to have local licenses. See, if I talk of MP, we have got local licenses in the form of Gumashta license and Nagar Nigam license. They are called shop and establishment licenses. So these are necessary for the startups also. Along with them, we are required to take Udyam registration, that is MSME registration. For startups which are in food category, we need to have FSI registration. For pharma startups, we need to have drug licenses. For all the startups which are into export of goods or services, it is necessary to have import-export licenses. I'm sure, I'm not dealing with individual license, that what are the requirements, because GST, PAN 10 we are aware of. Shop and establishment is not to be dealt with at CA offices. These are local agents. Say in MP, we have got MP online establishments which provide shop and establishment license. Udyam registration is also online. Once you have GST registration, you can apply for Udyam registration. For FSI registration and drug licenses, we have got specific specialists which provide those licenses. So those are also not our domain areas. And so far as IEC are concerned, now IEC is pen based, and we can apply online just following the instructions. They ask for PAN, Aadhaar card of the director and the area in which we are going to work. Next is the labor law compliances. Once any organization is registered under a startup as a startup organization, the 7 major labor laws, they are not required to comply with. The only thing that is required is from the startup director or startup owner, there is a declaration required to be given that the startup is going to follow this follow with this labor law. So they can file a self-declaration within 1 year from the date of incorporation and can get the exemption from labor inspection. So normally in labor laws, we observe that there are a lot of inspection being carried out by labor department. So this exemption is available only to startup. For second and third year also, they are required to apply for that exemption of non-inspection. What are those 9 labor laws which are covered under this startup, for which we are not required to have this inspection? These labor laws are namely PF Act, Employees Provident Fund Act, then ESIC, then Maternity Benefit Act, then Sexual Harassment of Women at Workplace Act, Payment of Wages Act, Contract Labor Regulation Act, Industrial Dispute Act, and Trade Union Act. As you all are aware that PF and ESIC are required to be followed once the number of employees increases a particular level. Say in case of PF, if the number of employees increases 15, then an entity is required to get itself registered. With the ease of compliance, abhi hum dekhte hain ki ROC is providing with this registration. So in case a startup is already having number of employees more than 15, can get the registration along with the incorporation of companies. Else, whenever the number of employee increases 15, they need to get themselves registered with PF Act. Only exemption which is available is that there will not be any visit or inspection from the labor inspector. Next is IPR compliance. Yeah. Okay, let me just check. If for me it is yeah, I'll do it again. Now, which slide is appearing? Registration and license required, right? No, I am unable actually to change the slide from my side. No, I can change it. Yeah. Now the next one is registration required. Can you see that? Okay. Labor law compliances, only self-declaration is required to be filed for 9 labor laws. So for 1 year from the date of incorporation, there is exemption from the visit of labor inspector. For second and third year simultaneously, again, you will be required to file those declarations. Next is IPR compliance. IPR is the most important part of startup. May it be trademark or may it be patent or may it be copyright of the code of startup. There are various exemptions available in IPR. You just need to apply for them. For patent, there is an exemption. There is a cost benefit of around 40,000 rupees. For trademark also, government has provided that the cost of trademark will be reimbursed to the applicant. So trademark, copyright and patents are the main IPRs required. Startups are required to take them so that their startup is not copied. Because once they take the copyright of their code or once the trademark is copyrighted, then the same name will not be used for any other startup. IPR, we can provide this services to our clients. There is a site of IPR where we can check whether trademarks are available or not. And it is necessary for any startup to protect the intellectual property right involved in developing their startup. And then next is income tax benefit. There are various income tax benefit, and I'm going to cover individual one by one all the benefit, giving details of the same. Angel tax investment under section 56(2)(7)(b). Actually, section 56 talks about the income which are not covered elsewhere and where there is a difference between the consideration received and the cost. Whereas angel tax has been brought wherein in case of a startup, if the valuation, in spite of having losses and the valuation has come high, and because of the valuation, the cost at which the shares are transferred are very high, provided it should not be more than 25 CR. So the difference will not be considered for the purpose of you will get exemption as angel tax exemption on the difference. Say for example, I have got a startup. Book wise, if I go for the valuation, they are very less. Say already the company is in loss. However, when the startup approach an investor, it is observed that the investor has valued those shares at say 10,000 rupees per share. So likewise, there is going to be a huge difference between the value of the shares and the value as finalized by the investor. So angel tax exemption is available to those founders of the startups. When they sell their shares to the investor, they'll get this benefit. Another one is income tax deduction under section 80 IAC. This deduction is specifically available to startup. Is deduction they have got the option that out of the 10 years, they can select any 3 years wherein they'll claim the profit from the business as exempt income. For claiming this deduction, it is necessary that startup is registered with DPIIT as a registered startup. And at the time of registration only, we are required to fill in the form for deduction under section 80 IC. Next is set off and carry forward of losses by eligible startup. At all the places wherever the word eligible startups, which are registered with DPIIT and which have provided for income, which have provided you fill in the form required for getting exemption under 80IAC. Then capital gain exemption on transfer of residential property. In case if any individual or HUF has sold the residential property and there is a capital gain on such sale, then if they invest that capital gain in a startup, this is available exemption under section 54GB. अगर वो capital gain अगर startup में invest करते हैं, provided startup immediately within 4 years should not sell all its shares, so that capital gain is exempt from tax. Similarly, some bonds units are also there, which are covered under 54EE, where there is investment in those units, they are eligible to exemption under section 54E. That means likewise we invest in electricity bond or rural bond. उसी तरह से startup investing in units of funds which are investing in a startup are also eligible for deduction. Deferment of ESOP tax liability under section 160, 156, 191 and 192. Under these sections, there is a deferment available that in case of ESOPs, the employees can have the capital gain taxable in next 4 years. There is additional tax deduction in case of eligible employees. Eligible employees are employees having salary less than 25,000. It is under section 80JJA. This all exemptions are available provided that the startup is registered with DPIIT and also they have applied for the eligible startup under section 80IAC. This specific form number 1 is required to be filled for the same. Next are ROC compliance. Along with income tax, ROC has also provided specific waivers in some of the compliances. Like ROC has exempt the startup, which are initial stage startup, which have not crossed a particular level of funding from preparation of cash flow statements. So startups are not required to prepare cash flow statement along with their audited balance sheet. As we all are aware that as per ROC, any company is required to conduct one board meeting per quarter. Whereas in case of startups, an exemption is given that a startup can conduct one board meeting every 6 months. Then also, they are not required to conduct 4 board meetings in a year. 2 board meetings will also serve the purpose. Next is acceptance of deposits. Acceptance of deposits in case of startups is allowed, provided from their investors, and specific agreements with the investors are there and are filed with the ROC. Sweat equity share up to 50% of the paid up capital, provided it is up to 10 CR. The companies are allowed to issue sweat equity shares to the shareholders or to the employees or to the employees of the company. Issuance of ESOP, same condition is there for the issuance of ESOP also, that 50% of the paid up capital of the company can be issued as ESOPs in case of startups. Startups can also issue convertible notes. It is, as we all are aware, that for issuing either sweat equity shares or ESOPs or convertible notes, it is necessary to comply with the requirements of paid up capital and as well as the net worth. Whereas in case of a startup, those requirements are liberal for issuance of ESOPs and convertible notes. This was the last slide from my side. I hope I have covered. Actually, I was of impression that it is of 20 minutes only, so I have not covered FEMA in my deliberation. So any query, if you have, you can ask.
Yeah, thank you, Karishna ma'am. Actually, startup is such a buzzword, but setting the fundamentals right was really very important. And this presentation and your explanation definitely helped us think through what actually it is and what it takes a startup to be legally compliant. So I will move on to the questions now. We've received from the participants several questions. I'll take it up one by one. The first question is, what kind of license is required for a business which is starting an e-commerce platform?
I mean, for e-commerce platform, there is no specific different licenses required for e-commerce platform, except that payment gateways and approval of payment. Because e-commerce platform as such is not into any specific type of license. I mean, it is normal trading, of course.
Right.
So normal GST registration and payment gateways and approvals are required.
Right. So it's just a business model. The process
Absolutely.
remains the same.
Absolutely.
Okay. Thank you, ma'am. I'll take up the next question. The next question is, what if someone wants to start the business with an individual name? They do not wish to form a partnership structure or a private limited company. So is it possible that a startup can have a sole proprietor?
No, actually, see, for having a startup, you are required to take DPIIT registration. And it is very clear in a startup norms that any incorporated body only can register itself as a startup. They are not talking, neither talking of individual nor of HUS. So
Right.
they can't have startups, registered startups.
Right. So, ma'am, you mentioned in the start of the session itself that in Shark Tank, they did not kind of appreciate the two startup structure. I mean, a single person handling two businesses altogether. So, another question prevails around that arena itself. How do a early age startup build a sound regulatory framework which would help it further increase its internal and external compliance mechanisms? So what is it? What are the key takeaways for those promoters to build a strong regulatory framework?
See, first is while incorporating a startup itself, they have to take care of the points which they are considering in their MOA and AOA. Because it is always observed that once we registered AOA, it is difficult to get it changed. So take care of the compliance documents. Yeah, incorporation documents is the first part. The second part is there should be agreements at place. There should be agreement inter se between the promoters themselves. There should be agreement with if the promoter themselves are not the IT developer and they are getting IT developed from a third person, it is necessary to have an agreement with the IT developer. The terms of agreement should be very clear. The problem which the incident which I had quoted about Shark Tank India, the problem was that those two were technical guys and they were under impression that for getting this patent, they need to have a separate company. And
Right.
that was the biggest issue because see, startup is an idea converted into product. So if you are having an idea in another company and the sales has been done by the second company, it is very difficult. Then you need to go for merger. So if such thing has happened, so 6 months process for merger and then deciding on the equity ratios at the time of merger, this all problem you are required to face. If you are clear from day one, all the documents are at place. See, all the documents with regard to the agreement related to all the third parties should be at place. The percentages, the shareholding from day one should be in those percentages which you have identified that this is the specific percentage of holding each one of the founder will be having. Along with that, at the time of GST registration or say registration with DPIIT, because DPIIT registration is very tricky. They ask each and every question to be answered in say 500 to 2000 words. So wherever you are elaborating those things, you need to be very careful at the time of elaboration of those things. You should not miss out anything in that.
Right,
So
ma'am.
once the documents are at place, that's why I told you that it is very much required to have chartered accountants, because as a chartered accountant, we can take care of documentation part, which is very important. Later on also, if anything goes, see, startups agar 100 ban rahe hain, so there are 2 startups which are flourishing, So 98 are something which are not managing things well.
Yeah.
So tomorrow, if they go into arbitration and all also, that time also this documentation plays very vital.
Right, ma'am. Thank you. Thank you for the elaborate answer. There's one more question from the audience. I'll just put it across. So the question is, what is the difference between getting registered with DPIIT and getting registered with DPIIT with benefits to avail the exemptions? What is the difference
Actually,
between the two?
there's no difference between the two. DPIIT registration is normal registration. Once you file all the documents related to that, later on they ask whether you want to take income tax exemption also. Then you are required to file Form 1. And for income tax exemption, they transfer all your documents to income tax department. So for income tax registration, all the process is redirected to income tax department. They'll check the things and then they'll provide that registration.
Got it. So there is no difference per se.
Yeah.
Got
I
it.
mean, you just have to have a DPIIT registration. Then also you can apply for income tax registration independently after that.
Yes, got it. That clarifies, ma'am. Another question is, this startup space altogether kind of experiences a lot of international exposure. FEMA, you just mentioned, in terms of foreign funding, foreign mergers and acquisitions, FPI, HNIs on board.
Right.
So what are the key areas from FEMA perspective or from being compliant in terms of international exposure? What are some of the key areas we should take care of?
See, so far as FEMA compliances are there are a lot of liberalized norms. After the startup scenario, there are a lot of liberalized norms. Secondly, there are a lot of industries. There are hardly few industries where you can't have foreign investment at place, right? So the things are liberalized to a large, huge extent, in fact. So, so far as this, I mean, I'm not much expert in FEMA. That's why I have not covered that into detail in the startup scenario, because the startup mainly I deal with are having Indian investors and Indian scenario.
Right.
So I might not be the right person to reply to that FEMA.
No, but that was quite an overview. So that's that. Ma'am, anything else you would like to share with us, which is important to get our fundamentals straight?
Yeah, actually, I feel that as a female chartered accountant, when a lot of females find problem of working in full day scenario or at offices, startup consultancy is very good area, because you can have limited clients and you can take care of anything and everything for them. So this will make them stay connected with the profession also. This is new upcoming area. If you specialized in this area, you have got a lot of different opportunities. And this is not something which is required to be done on routine basis. Because see, so far as GST compliances are concerned, they are on monthly basis. So for startup and all compliances, it is refreshing actually. Because every day new challenges are there. You are learning something new. So, I mean, it's very good area that can be explored for.
There are no precedents. We have to work, research, and then make our path.
Absolutely. So you have mind application in that.
Yeah. So it's quite exciting in that manner.
Actually, it is exciting.
Yeah. So, ma'am, one more question has come up from the audience. It says, what is the right time to get registered with DPIIT?
I'll suggest that immediately, as soon as you have an idea and you got the company incorporated, it is better to register at that point of time only. Because if you do not register your startup at that point of time, there are going to be a lot of documentary part, because with working in a company, the documentation are going to increase. Say if your company is 2 years old or so, you are required to give all the documents of last 2 years. Instead, if you registered immediately with the DPIIT, less documentation will be required. If you are sure that you are going to work in the company and you are going to promote that, it is better to get it registered as soon as you incorporate the same.
Right. Any other questions from the audience? I've taken up all those all the questions which were up on the dashboard. Any other questions from the audience? Ma'am, one question has come up.
Yeah.
It says, is it required to do course related to startup, some specialization? If yes, what would it be? If no, can you just take the idea ahead, understand the compliances from the public domain and go ahead?
See, normal, as I already explained, normal things which are required for any startup are same as required for any company. Incorporation is already there. Taking PAN number, TAN number, GST registration, we do it on regular basis. So there is nothing new in that. Only thing is required for filing DPIIT form. I think someone who is having good command over content can write and fill in those forms. Right. So apart from that, I have not come across any course which can teach you all these things, which are basically legal requirement for the same. As a chartered accountant, if we are doing work for the companies, we are well conversed that for any company, what are the documents which are required to be filed with ROC. Annual compliance for startup or for normal company are same.
Yeah.
So far as income tax is concerned, same practices are to be followed. Only deduction under ATI is required to be claimed. So that way, I don't think, because see the courses which you see very often, which we come across, they are all talking about ideation, conversion of idea into what is prototype, what are startup terminologies and all. And so those are very general type of course. As a professional, when we talk of legal compliances, we talk specific of that compliance. We can't be general with our consultancy. So, I have not come across such course.
Right. So it's same as normal company, but just being extra careful with the DPIIT registration, drafting and putting it across.
Drafting of agreements is also challenging with startups.
Yeah.
See, while applying for patent, copyright, trademark, you have to be careful. Then drafting of those agreements along with, at times we might feel drafting of shareholder agreement might not be our cup of tea as a chartered accountant. So whenever you are taking help from a legal advisor or somebody, whenever we check those agreements, we found few points which are relevant from, say, income tax point of view or from ROC point of view. So that extra margin should be there from our side.
That understanding.
Yeah, absolutely.
Yeah, I think one more question has come up, madam, from the audience. What kind of now people are getting super inspired here, and they have written, how can we start our own startup consultancy?
See, for startup, I already told you that you need to have a problem. Just say problem and then solution for the same. So the problem which you are assigning, that is important. Then it should not be the replica of some startup which is already there. So that's it. So if you have a problem, then the technologically solution of that problem. Then the important factor with the startup is employment generation and scalability. The idea should be such that it is scalable multifold. यहाँ हम normal industry जैसे 1x 2x नहीं बात करते. Startup में when we talk of 100x at one point of time. That's why, see, in 2019 only 9 unicorns were there, whereas in 2022 we have 44 unicorns. So scalability is must for any startup. Employment generation and scalability.
Right. The idea should be such that it should qualify to be called as a disruptor.
Absolutely. The problem, see, you should identify the problem first. The problem should be actual genuine problem. And then the solution or the idea should be such that some technological usage is there. See, there are a lot of startup for green energy. There is this startup client of mine who is using PET bottles and converting those PET bottles into fabric.
Wow.
You might have heard of that airlines, Rakesh Junjunwala's airlines. Avanza is using those material for the uniform of their crew.
Wow.
So this is innovative idea. This is environment friendly also, because we don't have any usage for the PET bottles. So if PET bottles can be converted into bag or into cloth, there is nothing like that. And that too, those bags are also can be recycled. So those type of ideas are the main key. Not necessarily, see, we as a chartered accountant at times I feel that we feel ourselves less creative कि इतना ऐसा technological chemical होना चाहिए कुछ ये, it is not necessary. We can have ideas in our field also.
Right.
So it is just the problem which we as a chartered accountant face every day, and we can work on that problem and bring up the solution for the same. There are a lot of problems which we face daily. So we can find solution in those also.
Right. Sure, ma'am. One another question has come up, ma'am. Does a CA requires to certify anywhere while applying for registration with DPIIT? Does it require CA certification?
No, CA certificate is not required if it is a new company. Only thing they need is out of the, say if there is a company and there are two directors, they need an authorization in the name of single director so that he can sign or his digital can be affixed for the registration. That's it. No CA certificate is required if it is a new company.
Right. Understandable. I think I have taken up all the questions. So if there are any more doubts, participants can post it on the dashboard and I'll take it up.
Yeah, by the time questions are being posted, let me take some time and address all my dear participants. So friends, very, very good evening to all of you and wish you a very happy new year.
Thank you.
Happy New Year to you as well, ma'am.
Myself, CA Preeti Saula, my video is off because I'm traveling right now. So totally dark it is coming. So that's why I have put off. So, and I thought I should address all of you so that this new year begins. I wish all of you a very, very happy new year 2023. And I wish that you all achieve the greatest height in your career in this new year. So we had every Wednesday, we are taking the sessions on this Sky High Symposium, and the first ever series in our Women Members Empowerment Committee. And I hope all of you are really gaining a value-added knowledge with this series. We are successfully completed the campus placement program for CA women specifically, and it is our endeavor to serve the best to the CA members, students, and our women fraternity of the institute. Yesterday only we had report the results were out of CA Institute, and first time, friends, in the history that we have announced the results of CA Intermediate as well as CA Final, both the results together, and this has happened for the first time. And we have also started with our ICI call Sahayata 9975. So the members and the students as well as the stakeholders can connect to this number and solve their queries, the general queries with this number. And friends, let me tell, we have taken more than 100 meetings so that this call center can come up. And more than 10,000 hours unitedly we have put. In last 6 months, we have worked very hard so that, you can easily solve. We have compiled more than 1,100 questions, which are the general questions and the queries of the members and students, which we are getting in regularly. So now for small things, you need not go any council member or anyone. You can directly connect to the number and you can solve your queries. The number is 9995 I am the joint convener of this ICAI called Sahayata. So these are certain things which are going up. Again, the notification of social stock exchange has already been come under BSC, that is on 27th of January. I am also the part of governing council of social stock exchange, and uh, 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 the new area of social audits that also has come up for the chartered accountants, where you can qualify the exam conducted by NISM and become the social auditor. So these are the certain things and initiatives of ICAI and WMEC and Sustainability Board which are there. If you have any questions relating to ICAI also, please feel free to connect with me, and you can ask now also in the chat box any questions relating to the ICAI members, students. You can connect. You can ask right now if you have any query. So I think Charmi is there, who is moderating the session. And Garjana, you had the excellent session. Today's second session, you have completed 36 series, 36 episodes of this session. And I want to complete, to 3-digit 100 sessions. So looking forward, like, this series will continue. Yeah, this series will continue, and this is a platform which is given by the WMEC to all the women members to come either as a speaker or moderator or to coordinate. So please take the benefit. Please feel free to connect if you want to take the session, or if you want to be the moderator of the session. I am requesting and all the entire audience to be part of this series. No doubt you are part of this series as an audience, but come as a speaker, come as a moderator. And if you want any support to become the speaker or moderator, that also we have the core committee, and I assure that we will provide the support and we will groom you to become the speaker, and that is the promise from my side. So friends, it is your ICI. You all are the brand ambassador of ICI. So please feel free to connect and please come forward. So over to you, Charmi.
Yeah,
We can
thank
take
you,
up the
Preeti
questions.
ma'am, for addressing us, and that was really motivating. It does not take much to just come out and learn from our colleagues, especially our women members. Thank you, Preeti ma'am, for your audience address. I think with this, we reach end of our webinar, and I take this pleasure to propose a vote of thanks to Garjna ma'am. Thank you for taking out time from your busy schedules. In your introduction, we saw you are part of so many activities. You have so many interests, but this really means a lot to us. Thanks for taking out the time and sharing such valuable insights with us. I would also like to thank ICI's Women Members Committee, Empowerment Committee Chairman, Chairperson, Vice Chairperson, and the entire management team for conducting such amazing series of webinar, which is for women by women. It really motivates all of us here, and it is definitely something that drives us to go ahead in what we want to achieve. So, at last, I would also like to thank all the participants for their exciting questions, their enthusiasm, and giving us a patient here. With that, I reach the end of the webinar and bid adieu to all of you. So, see you all until next time. I would request the IT team to close the call. Thank you.
Yeah. Thank you very much. Hi, Bhumika, Hetal. I hope everyone is fine. Happy New Year.
Happy New Year, ma'am.